Hey, crypto friends! Now, there are all kinds of basic moving averages out there that can flip the crypto market literally upside down. But there is one particular moving average that I use on a regular basis. And I have been using it to short my way to $100 plus per day on repeat. And hardly anyone talks about it. Why? I have no idea. But once you see how this works, you will not be scared to make money trading to the downside anymore. Now, for those of you who love trading crypto and would like to try out the same crypto exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here. You can find it with the link in the description below this video. I personally love this exchange because they allow anybody from anywhere to be able to trade crypto futures. So if you're one of those people, feel free to go ahead and give it a try. All right, guys, so here's the thing, all right? First and foremost, like I mentioned a lot in my $100 a day videos, you're going to need at least $1,000 in your trading account at minimum to make this work. This way, you can enter trades with at least $200 to start out, and if you lose trades, then you will still have money left over to trade with in your account. So, now we will go ahead and move on to the best types of coins to trade, all right? So, the best types of coins to trade for this specific purpose is going to be 1, coins that recently pumped that are ready for a reversal. 2, downtrending coins rejecting the moving average on retests. And 3, coins that are in uptrends that deviate super far away from the moving average and temporarily drop back down to the moving average once again. All right. So now I'm going to go ahead and I'm going to actually show you these examples. I'm going to show you examples on these live charts, and I'm going to show you how you can make $100 a day with using $200 as margin between 2 to 3 different trades per day. All right. So the first coin that I'm going to show you is going to be the first example I'm going to be showing you is a coin that recently pumped hard, all right? And this would be the NMR coin, all right? You can clearly see that this coin, we are on the hourly chart right here. You can clearly see that this coin has pumped like absolute crazy. I mean, we are talking about 137% right here within less than 24 hours here. So you can trade these coins to the downside and make some pretty decent money, all right? Now, the way that you would want to trade these coins is you want to trade them when price action deviates super far away from the moving average, all right? As you can clearly see, we have got this very far deviation right here from the moving average. When price goes up like that, very, very violently like that, it's not going to go completely straight up forever. It's going to want to come back down and retest the moving average before going back up again. And you can clearly see that clear as day right here. This happens all the time, all right? And as you guys can clearly see, it happened again right up in here as well, all right? We went up, we ended up coming back down, we bounced off of the moving average and started going right back up again, and we ended up deviating super far away from the moving average once again right in here, all right? And look what happened. Price ended up coming back down, and you can see it in the candlesticks themselves as well, all right? You can visually see the weakened momentum, all right? And the way you can see that is by looking at the candlesticks. You look at the wicks, and you can see that the wick went really far up, but then bears pushed it all the way back down, and then the next candle opened, and it ended up creating what's called a spinning top candle, which is typically an indecision type of candle. And when you see that indecision candle, that means that bulls and bears do not know what to do anymore, and the price is likely going to start coming back down, all right? So if you were to have traded these two drops back down to the moving average right here, you would have made some pretty decent money. So again, we are on the hourly chart here. And if you were to have ended up trading this, so let's say, you're watching this and price ended up going straight up, deviating super far away from the moving average, and the next candle ended up opening, it went all the way up and it started to go up again, but bears ended up pushing it back down. Now, once bears ended up pushing it back down, you can clearly see that this candle ended up closing below the previous green candle right here. That tells us that, bears are starting to take over again because they want to retest, and they want to retest this moving average right down in here. So you would have wanted to enter when this candle ended up closing below the previous green candle right here. All right, so you would have entered right in here somewhere, and you want to ride it all the way down back to where we are retesting the moving average right here. So on that small trade right in there, you want to get in right here, and you want to exit when it hits the moving average once again. All right, because you don't know if it's going to end up going straight, end up going down even further, or if it's going to bounce back to the upside. So you want to take your profits right in there, and there you go. So if you were to have traded that small setup right there, you would have made about 6.8%, or if you're using like 10x leverage or something, you would have made roughly around, let's see here, that would be roughly around like 68%. Or if you're using 20x leverage, that would be roughly around like 13.6% or 12 some percent. I don't know, my math is terrible. But let's go ahead and let me find my calculator here real quick. And let's see what that would have been. So if you entered the position with $200, and we are going to go ahead and multiply that by 68%, you would have made roughly $136 just off of this one simple 2-hour short that you entered right in here. Now this is just one trade, guys, all right? So let's move on to a different one, all right? So if you were to have ended up going all the way up here and ended up trading off of this spinning top right here and entering on the next candle and trading it down back down to the moving average, let's see what you would have made. So you traded it all the way back down to the moving average, which would have been right here. That's about, with 10x leverage, that's about 96% profits right there. So you would have made, let's see here, 200 times 0.96, you would have made roughly $192. So guys, within 5 hours of trading, because this trade would have taken 3 hours, within 5 hours of trading, you would have easily cleared over $100 off of these two shorts right here, all right? So that is how you can short the crypto market and profit from the crypto market by trading coins that recently pumped super hard, all right? Now, we're going to go ahead and move on to another example here. And the next example is going to be on downtrending coins that are rejecting the MA retests, all right? So we're going to go to a downtrending coin right here. And you can clearly see that, when price ended up getting to the top, it ended up coming back down. And when price action is below the moving average, it means that, obviously things are pretty bearish right here. All right. So what you want to do is when price starts coming all the way down and deviating super far away from the moving average, once again, it's the complete opposite as what I was explaining in the last example. When price action goes all the way back up, you can clearly see it right in here. Price ended up coming down super far. We deviated really far away from the moving average right here. So that tells us that price is going to go back up and retest that moving average because it wants to retest it, because it can't just go straight down forever. That's just not sustainable, and that's not how markets work. So it's going to go back up and retest the moving average, and that's exactly what it did. And realistically, you could long it back up to the moving average as well to make even more profit. But this video is about shorting, so we're only going to be talking about shorting it here. So we went back up to retest the moving average. As you can clearly see here, we went above the moving average, but the next candle ended up opening and it created once again another spinning top candle, which again tells us that there's a lot of indecision still, and it's very, very likely that we're going to end up dropping even more. So here we go again. We come back down and we come back down out of this spinning top candle right here, and then the next candle opens and it is a bearish candle again, and that is where you would want to enter your trade. So if you were to have entered right in there and you ended up riding it down to wherever you feel like is a good comfortable level, usually I like to ride it down until until price action or the candle itself starts to deviate super far away from the moving average, which right here is a very decent level to take profit on, which is where I probably personally would have taken profit on it. So if you were to have ended up getting out right in here, with your $200 used as margin for this trade, you would have made roughly around 105% here, within 2 hours of trading right there. So you could have easily made right there, off of your 2-hour trade, 200 times 1.05, you would have made roughly $210 right there, which is $100 plus off of that one simple 2-hour trade right there, okay? Now, obviously, you could have wrote it down even further if you were to have entered right up in here and held it all the way down to even further down here when it's really, really far away from the moving average. You could have made roughly around, geez, I don't know, multiply that by 10, 18 times 10, that's like 180, 190%. So, with your $200 used as margin, we're going to multiply that by, if you're using 10x leverage and you make 19%, that's going to be about 190%. So we'll multiply that by 1.9. You would have made roughly $380 on, again, another 6-hour trade right there. So again, it's very, very easy to short the crypto market and make money from shorting the crypto market on a daily basis. All right. Now we're going to go to another example, and I'm going to show you another example on just a regular coin that's currently in an uptrend right now. All right. So as you guys can clearly see right in here, as you can clearly see, we've got an uptrend going on right here, okay? And this is kind of what I was explaining in the very first example, all right? When price action starts going all the way up and it deviates far away from the moving average, we create these spinning top candles because bulls and bears don't know what to do anymore because, obviously things are just getting way overextended at that point. And price action wants to end up coming back down to retest the moving average. That's exactly what ended up happening here. So even with this small little trade right here, if you were to have ended up trading this, now, obviously, right here, we've got our spinning top candle, but the next candle did end up opening and it went upwards instead of downwards. So again, you wouldn't want to enter right there because obviously the next candle ended up going up instead of going back down. All right. You want to wait until the candle starts going down before you enter. All right. So obviously, we end up waiting for the next candle, which did end up opening red, and that is where you would want to enter your position right there, all right? So if you were to have entered this position at the top of this candle, riding it back down to the moving average, you would have made roughly around 1.97%, which would be roughly around, pretty much a 20% gain. So with your $200 and multiply that by a 20% gain, you would have made roughly $40 on that 1 hour trade right there. All right. Now we'll go ahead and move to a different uptrend and show you pretty much the same type of example here. All right. So here's another example. Price action went all the way up, deviated far away from the moving average. Now there's no spinning top candle here, but the next candle did end up opening and it did not end up going higher or closing higher than the previous candle here. So that tells us that it's going to move back to the downside and start to retest the moving average once again. And so if you were to have entered this one and wrote it back down to the moving average, again, that's another 20% right there. You would have made another $40 right there. So overall, when you do this over and over and over multiple times a day, because there's all kinds of hours to trade in a single day, when you know what you're looking for and you can get in on these shorting opportunities, you can make some pretty decent money. I mean, even if it's only $40 here and there, do that 3 or 4 times a day, you're going to make, 100, anywhere from $100 to $200 a day very, very easily. All right. Now, overall, guys, this is how I personally short the crypto market on a daily basis. And me personally, I have zero issues making profits. So if you guys are struggling to make it work for you, feel free to go ahead and hit me up and we will try to figure out what might be going wrong for you. But overall here, before I go ahead and wrap up this video, if you guys enjoyed this one and you feel like you got some pretty decent value out of it, please be sure to go ahead and subscribe to the channel, hit the like button below to help me out on this video, and drop me a comment below on something that you loved about this video. And with that said, guys, for those of you who stuck around and watched this entire video throughout the whole thing, thank you guys for watching. I appreciate all of you, and I hope to see you all in my future videos.